everybody, this is Dan Sheridan. Welcome today. This is Thursday, March 16th, the day before St. Patrick's Day. Reminds me of when I worked at the CBOE for many years. I'd go to, at lunch, you'd walk over to the Berghoff restaurant. They'd have a walk-up bar. You go in there and they'd have the fresh turkey in the meat cutter. They'd have the corned beef, slice it, and you'd get their homemade root beer, right? I mean, it's the best root beer I've ever had. And then you'd get the this hot corned beef, good quality, on the rye bread, pickle on the side, and the root beer. Oh my goodness. Got you out of the pits for a little bit, fresh walk over to Adams Street from the CBOE. Oh, for the old days. All right, today I'm going to talk about put credit spreads. I think, in the SPX as a steady trade that you put on a weekly basis. You say, Dan, wait a second. We've been in a downtrend. Well, we've been in a downtrend for a year. And when you look at it, in a lot of ways, we've been more neutral to up over the last year. I mean, we went down 20%, but we're still down around 20% from the highs in 2022 in January. Now, a couple things. In SPX, you generally get about a 20% premium if you go out, like we picked the short strike and a credit spread by the delta, right? And get into that in a second, possibly. But because of the higher volatility in the puts than the calls, for let's say a 10 or 20 delta, you get about a 20% premium. What does that mean? You get 20% more distance when you sell a put versus a call. And generally, the market goes up more than it goes down, except for the last year. But the last year, or year and a half, once it actually went down to 20%, in the beginning of 2022, for the most part, it's, we've been kind of range bound, right? At times go down, at times go up. But the point is, I'm going to introduce you to kind of a little plan here and a little challenge, especially for newer traders. You start this at paper, eventually work your way up to live trades. You do I'm going to give you about a $400 trade. So you're going to go and sell like a 20 delta put. And that just means that the strike you're selling, there's only a 20% probability it's going to close underneath that at expiration. And you do it on a regular basis. This would be very similar to your thinking with cash secured puts or covered rights. It's more of a neutral to bullish strategy, but it's a high probability trade. So like in this instance, on today, March 16th, we're around 39.19 in the SPX. I'm going 3 weeks out. So you do this every 3 weeks. You can do it. The nice thing with weeklies, you can do this every week. You can stagger and do one every week, right? 21 days out. You literally find an expiration near 21 days every week. But so here's what April 6th, which is 21 days out as of March 16th, I'm selling the 37.30 put, which is about 190 points out of the money. And for a smaller trader, someone learning these put credit spreads, I do 5 wide. I'm buying the 37.25. So if you look here, it's a 5 wide spread. So the most you could lose is $500, bringing in an $80 credit. So your margin or risk is going to be the $500 less your 80 is $420. So, the potential return is about 20%, right? $80 on $420. And we would look for around 10%, right? So 10% of your margin or risk of $420 be about $40. So if I sold it at 80, buy it back for 40, and I don't want to lose much more than 15%. So 15% would be about $60. So if the 80 goes up to 140, I'd get out. Simple plan. But I think the key is trying to get used to doing these on a regular basis, right? I mean, there's a lot more to be said. I just want to kind of introduce this strategy. And next Tuesday, the 21st, 4 days after St. Patrick's Day, we'll be starting our February our March 3K class, plan to make 3K on $25,000. We've been doing this for 17 months. And this is going to be one of the trades we'll be doing more of, live trades. So, and you'll be able to do it with us. We'll teach you the craft as we go along. But this is a nice trade that I like to intentionally put on every week, and you get used to it. And with the risk management, which is crucial. So, anyways, check out our website, Sheridan Mentoring, and we start the class next Tuesday. But this would be one of the trades that I would be talking about in more detail. Put credits, a regular dose of put credit spreads in the SPX as part of your trading plan. All right, folks, have a nice day. We will see you later. Thank you.